Think about that. Yes, AI is sexy. It's important. It's going to be game-changing. But you know what else was game-changing? The dot-com revolution. That means the Fed is not cutting rates. The economy is already showing signs of stress. I still am not convinced we're out of the bear market yet. I think that people that say we're out of the bear market are slightly jaded by hopes and dreams. Gold is the pure play here. Bitcoin eventually will be. I know I'm a big bull on that long term, but not on the short term. Last weekend, there was a holiday weekend here in the United States. We know that Monday the markets were closed, at least for stocks and commodities. There were some futures trading. Futures did trade accordingly till 1 p.m. Eastern time. But basically the bottom line was that we had a day where the markets were closed but reacting to the debt ceiling news. And again, just for anyone who's been out of the loop, McCarthy and Biden came out and they basically said we have a decision on or an agreement on the debt ceiling. It still has to be voted on by Congress, by the Senate, by the House, but ultimately it's expected to pass. Now, if you looked at the markets yesterday, we opened higher and then we kind of sold off. Tech was strong. Why? Because of the AI insanity. And talk about insanity, folks. And I want you to use this to start to shape your minds to avoid the hype. Think about that. Yes, AI is sexy. It's important. It's going to be game-changing. But you know what else was game-changing? The dot-com revolution, the internet. And if you go back to 1999, think about what happened there. All these stocks ran up hundreds of percentage points. And then I would say at least half of them went out of business. In addition, a bunch of them got acquired for pennies on the dollar. And then some survived, but their prices got cut by 90% before they moved higher. Example, Amazon. Amazon was a great example of this, where you ultimately had it dropping 90+% from its highs in the dot-com era down to like $6. And then it proceeded to go much, much higher, gaining thousands of percentage points. So my point is this, is that the hype out there is real, but it is not something you want to get caught up in. Sit on the sidelines. Let this stuff flush out. It will come in. And now we may not agree with this side or either side of the political, basically framework. But the bottom again is that you have to look at their motivations. They want to get reelected. Well, you know what? You let the U.S. default, how many people are going to be like, yeah, let's vote for that guy again. He screwed us all, right? I mean, think about that logically. So that's done with. Small investors got lured into the market. Now you have the fact that you turn your attention back to, wait a minute, the Fed is going to hike again, 25 basis points, all the way up even more? How long are we going to remain? I mean, we're almost half the way through the year. At one point, people were saying there was going to be cuts in the second half. We're still raising rates now that we're halfway through the year. All right? Inflation is remaining stubbornly high, which if you go back 12 months ago, I told you this. I gave you this game plan. The Fed was saying transitory a couple years ago. I said, nope, won't be transitory. And I said, inflation will come down from 9% because it's easy. You fix the supply curve, you fix the supply chain, you bring it down. What's going to be harder to fix is the fact that the retail worker, the average worker, is now making, instead of $12 an hour, they're making $20 or $25 an hour. That has to be passed through to the consumer. That means the Fed is not cutting rates. The economy is already showing signs of stress. It's the beginning stages of a recession. We're going to go into Bitcoin and crypto next. Now, one of the things, and I always tie crypto to stocks, is because they are risk assets. We know that, right? Eventually, I truly believe in Bitcoin, and I believe it's the digital gold of the future. But right now, it's not. And I say this all the time, is that it started in 2009, we're in 2023. It is a 14-year-old, right? Are 14-year-olds logical? Are they digital gold? Are they like the place you run to for safety? No. They're adolescents. They're off the wall. They're volatile. They're risk assets. That's what you have here. In mid-April, we made the high. Okay? Now, where is the S&P 500? Let's look at the SPX here. The SPX, short term, possibly just made a high 4 to 6 weeks later. We're going to find out, obviously, over the next couple weeks if that's the case, if this follows the Bitcoin model. we're going to obviously keep an eye on that. But I just wanted to show you that, is that there are these trends, there are these similarities between cycles. Bitcoin, again, you guys know I've been steadfast. I think personally 30,500 is the short-term top. I still am not convinced we're out of the bear market yet. I think that people that say we're out of the bear market are slightly jaded by hopes and dreams. I look at the charts. As long as we haven't taken out 30,500 and stayed above it, I'm in the camp that this is still going to come back down. I still think gold, again, gold hits short-term support. That's fine. I still think there might be one more dip to about 1920, 1925. But again, at this point, I remain extremely mid to long-term bullish on gold. Gold is the pure play here. Bitcoin eventually will be. I know I'm a big bull on that long-term, but not on the short-term. Gold right now is the play, in my opinion. This is the pullback off triple top. We might go a little bit lower, but in this range, this is where you start to rock and roll.